All right, guys. So next article up is mortgage rates continue downward trend, but housing market's still sluggish. I don't know if I completely agree with that, but because I think we're already starting to get out of that a little bit. But this trend is beginning to spark signs of life in the stalled real estate market. But economists do not expect affordability to improve materially anytime soon. In the last segment of the show, of course, I cited already that the Bureau of Labor Statistics showing that wage earnings is only 5.2%, while house price monthly cost went up by 11.2%. So there's a huge disparity in that. But I think that's going to change. I think you're going to see wages go up. I think debt service costs are going to go down with the Fed signaling that they're going to have rate cuts in 2024. I think you're going to see carrying costs of debt go down. Now, here's always the outlier. Will people actually spend their money on paying down their debt? That's it. Like, that's it. That's the outlier in that situation. You know, if adjustable rates are going to go down, carrying costs of having debt go down, you'll see car loans go down, lines of credit go down. I mean, as far as the percentage rate attached to those, they're going to go down. So I think some of that's going to get better, but we'll see.
Yeah.
Financial habits, we'll see.
Well, I think the idea here is that they want to bring potential home buyers who are previously waiting on the sidelines back into the market. I think that's already happening. The Commerce Department reported that housing starts surged 14% last month, signaling progress in the stagnant building market, which is great because for a long time, I talk about Monday Mortgage Minute. We look at permits, building permits that are pulled, and we look at new housing starts. They've been kind of thin, but also builder sentiment was high in December. Builder sentiment came back high. Now you see actual data, to your point before, data showing that housing starts is up 14.8% last month. That's a big deal.
That's great. That's a good sign.
So
builders are building.
Builders are confident. Yeah. Confidence is going up.
Well, yeah, we've been talking about, inventory for like the whole freaking year of 2023. Yeah. Super low inventory, not enough houses on the market, not enough months of supply, et cetera. Carve it any way you want. We've had that problem, but builders coming back was one of our solutions. We talked about, like, hey, we need builders. Hey, builders, come on back, builders, come on back. But I understand why they want to build at 8% rates. I totally get that.
Yep. And that's what I was going to say. Now that the rates are starting to, come down, this gives them that confidence to be like, hey, now we can actually make money on our investments here. So, that's going to ease up a little bit of inventory crisis. But then again, they're not going to build overnight, millions of houses. Sure. But that is going to help, as the time progresses.
But if the horizon of building is, let's say, 12 to 18 months from permit to, putting keys in someone's hand, that does carry us into 2025 and even 2026. And then if those same forecasted, let's say, soft landing the Fed's projecting by 2026, also seeing rate cuts start in 2024, continue in 25 and 26, then builders may have done the right thing by sitting on the sidelines for 2023 and just go, hey, let's just wait for a minute.
They played the Fed
let's just see. But then you see house prices holding. You see median home price going up. So it's like rates are coming down, so affordability can return. Home prices are stabilized, maybe going up. Builders are like licking their chops right now. Yeah. I mean, if I'm pitching it to myself this way, and I'm like, oh man, that sounds awesome.
So you're becoming a builder all of a sudden, Andy?
Okay, I gotta go.
They're like this right behind.
I'm gone. Yeah, behind the tree in the yellow suit. Hey.
Yeah. Here's the other thing with builders, right? Yeah. Everything seems so good, but everything can change really fast.
That's true.
It's very true.
Because we're seeing right now with the Fed kind of seesawing everything with our gross domestic products and unemployment. And so they got to keep a tight lid on all these economic indicators, factors that factor in. So they just got to make sure they all level up, right? And that's what they're playing right now, is that seesaw game.
And let's hope the supply chain holds, because Yemen's putting on pressure as well. So that's a conversation for later, though.
The great thing is
that's another conversation.
The great thing is we're going into an election year also. That, what president wants high unemployment, what president wants high interest rates. So they really want to see a little more of a stable economy. So I think a lot of this, is good news. But we already know, guys, with lower interest rates, some problems and solutions are fixed, but it also creates other problems.
Yeah. I think that's going to be that you're going to have bidding again.
Yeah.
Number one, I think it's going to disincentivize builders from doing incentives they'll disincentivize builders giving incentives to buyers. And, again, to the labor point, I mean, the labor's got to come from somewhere.
Correct.
And so people got to build these homes. Products got to be there. Supply has to be there. Rates have to be there. So there's a lot of factors. But what was so interesting to me about the end of this article was that that the housing market, which remains undersupplied, the median list price for a home in the United States in November of 2023 was 37% higher than 2019.
Wow.
And I haven't seen this comparison yet. So this is basically, without saying it, a pre-pandemic, post-pandemic metric.
Yeah.
And 37% higher in 4 years.
Well, I mean, 2020 was a massacre. It was crazy.
Yeah.
2021 was another crazy year. I mean, come on, that's when we were competing. Okay, so earlier we said we had 150 people going through it, 14 offers. 2020, 21, do you want to go through that?
50
It
offers.
almost felt like a pain in the butt. Like, honestly.
Shit, even if you had buyers, good luck. I got a whole bunch of buyers. You got houses? You got contracts?
Wait, hold
There
on,
was
hold
actually-
on, hold on,
there was-
hold on. You guys still both got people in homes. What are you talking about?
But we did. But
We
there was
could've done
more
more.
inventory, Andy. There was
Well,
more
I
inventory, right?
I know that, but even with 50 people, you're still getting people. 50 offers, you're still getting people in homes.
But still, Andy, it was very difficult because we also did not get a lot of people in.
That's true.
Okay,
I'm trying to give you a pat on the back.
No, and thank you, and I will pat myself on the ones that we worked in. Thanks to our realtor partners that did a wonderful job to get our clients in and negotiate. Right, it takes a team to make sure that we get them in. But there was also other people that had dreams and they don't have them right now.
Yeah,
because with that also they didn't have that $100,000 or $150,000 extra to put in.
Yeah.
You know what I mean? Some of them barely had enough money for even closing costs. And remember, at that point in time, nobody's helping. Sellers are like, why?
Yeah, that's right.
The
They didn't
terms
have
are
to.
ridiculous. I
Yeah.
had to name my firstborn after a seller.
Will?
Santiago.
But you know what I mean? Those are the things. And I'm sorry to say, even though 2020, 21 were great years, I kind of missed the 2017, 18 and all that where you still negotiated. People were still, you could still create that dream that they're going to get in a home.
Hey, that's when I got in this industry, I was like, wow, this is great.
Yes.
2 years later, what the heck? I can't even go up to go to the bathroom.
Yeah, man.
2 years later.
Yeah. You went from 100 miles an hour to 2 miles an hour back to, let's say, 80 right now.
But you know
Exactly.
what I will say, though, that throughout those years, I really have learned to appreciate being in business because it really gives you the harsh realities of what life is, what's really going on. And unfortunately, for consumers, they get a little bit of a shield with everything happening. But we're right in the forefront seeing these data numbers come out, seeing this information come out that directly impacts our business and the way that we do business. So for me, it's opened up my eyes so much in these last years.
Yeah.
Yep. Well, that was good. I think we're going to see positivity come out of that in the new year, guys.